And what you need to learn as a trader is you need to learn how to filter out the junk, ignore all the stuff that doesn't matter, the stuff that distracts you, and focus on the things that matter, right? I always look at trading as being like a magic show. You guys ever been to a magic show before? So what happens at a magic show, right? There's smoke, there's bells, there's whistles, there's dancing girls, there's shiny things, there's all types of loud noises, right? What is all that stuff meant to do? Is it meant to entertain you? It's meant to distract you, right? Because behind all that stuff, the sleight of hand is happening. The real trick. But we get caught up in the, ooh, look at that, oh, right? That we don't see the actual trick happening. The market is the same way. It gives you all this stuff to look at. All this cool stuff to look at. And I forgot who just wrote this, but someone wrote this. The more you know, the more distracted you get. So the more you learn about trend lines and double tops and this and moving averages and 15 different indicators, right? The chart that Jason showed you yesterday, the more stuff you learn about, the more you think you know, all it really does is just distract you even more from what really matters. So it takes time. I've been teaching for 10 years. There is no substitute from time on the chart. And it always starts the same way for every trader, right? They start off very confused. And then as they put work into it, it gets better and better and better and better and better. Joseph says, are we waiting for someone or what? What do you mean, Joseph? Who are we waiting for? Probably got his computer on mute. Can we start? We are starting. What do you think we're doing here? Is it? Do you have no sound? I guess if you can't hear me, if there's no sound. No sound? Yeah. Try tell them to restart if you don't have sound. Yep. So. Let's talk about reading a price chart from the most basic form, right? There are 3 ways that price moves. Who can tell me those 3 ways? Relax, Steven. It's all good. We want to make sure people are here to enjoy. There's no time limits on here. Relax. He's okay. He's not a nuisance. We just want to make sure people can hear. We want to make sure people can get the information, right? Markets can go three ways. They can go up, they can go down, they can go sideways. Now, I always love starting with this, and this is one of the most important lessons I was taught because it was so simple, it made sense, right? The most basic way to, and this goes back to talking about children earlier, right? Children are so cool because they're so kind of unaffected by all the other stuff. They kind of just focus on like the common sense, which is why Darren and I always thought children would actually be better traders than most adults because there's no association to money. It's kind of, you can give them other type of rewards and they'll just do the job. But an uptrend in its most basic form looks like this. If price action is moving from the bottom left of your screen to the top right of your screen, we are in an uptrend. Does that make perfect sense? At its most basic form, right? If price action is moving from the top left to the bottom right, we are in a downtrend. Make perfect sense? Yeah, right? If price action is hovering in the middle, we are in consolidation or a sideways market. Does that make perfect sense? So at its very basic form, right, if you're new to identifying trend, just zoom out your chart as much as you can, right? And like look at this chart, for example, right? What would be the most basic trend on this chart? Where are we moving from? Sorry for the change in color that probably blinded half of you. A downtrend. Why? Well, where is price moving from? Top left to bottom right. If we take a look at can't zoom out anymore, but this section right here, bottom left to top right, an uptrend, right? So that's the first way to really train your eyes is start with the basics. Now, obviously it's not that simple, right? So does an uptrend actually look like this? Is it a straight line that goes from bottom left to upright? No. It's an ebb and a flow. So within this uptrend, you're going to see this. You're going to see a series of extensions and retracements and 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 extensions and retracements. In the downtrend, you're going to see the same thing. You're going to see a series of extensions, this time downward, and retracements and extensions and retracements and extensions and retracements and extensions and retracements and extensions and retracements. So as we add these new things, this is what makes price a little bit more difficult to understand. Now we're gonna talk about some rules later, but things get even more kind of confusing when we add consolidation. So if we go back to basic kind of Dow theory or look at the Wyckoff cycle or something like that, the market moves in really, it goes through 4 different stages, right? There's an accumulation phase, there's a markups phase, there's a distribution phase, and a markdown phase. And I'll draw it on a little bit. Real quick, didn't get that with the extensions, retracements, please repeat. Sure. So again, the basic thing is that we can just take a look at this other chart I brought over. Cover your eyes, guys, it's coming. Where we talked about price action is, excuse me, going from top left to bottom right, right? So a downward trend. But price action doesn't just move in a straight line. You can look at your chart here. You can see it ebbs and flows, right? It extends, it retraces. It extends, it retraces. It extends, it retraces. So it kind of wiggles down in that trend. It's not just a straight line. So giving an idea of what an actual trend looks like instead of just looking at a line chart. Does that make sense? Yep, no problem. I don't mind the question. So going back to Dow theory, the Wyckoff cycle, the market moves in through 4 different stages. And we'll see this on a chart in very different periods of time. We have an accumulation phase. We have a markup phase, we have a distribution phase, and then we have a markdown phase, right? So the accumulation phase is going to look something like this, right? Where the market is basically, well, I'll let you guys answer it. We're moving like this. So what type, if we go back to the kind of the 3 ways that a market moves, what type of movement is this? Sideways consolidation, right? It's not going from bottom left to top right. It's not going from top left to bottom right. It's kind of just going sideways, right? So this is going to be an accumulation phase. Now from this phase, we'll do something like this, where the market shoots up. Now, during this move, what type of movement are we seeing? Uptrend, downtrend. Again, just focusing on the basic, most basic of terms. Uptrend, right? This is going to be called your markup. So this is your uptrend, right? We don't need to use these fancy words. Just call it uptrend. Should have just named the other one consolidation, right? Now, this could happen. The market can go directly down like that. But most of the time, once it reaches a point of exhaustion, we'll go back into something like this. Once again, I ask you, uptrend, downtrend, or sideways movement? This is called a distribution phase. Now, these words don't matter. You don't need to. I'm not really big on words and terminology.